Welcome back. Today, we're diving into a critical aspect of applying for FCA authorization, the financial forecast. This is often an overlooked and hurried piece of work, which, when the regulator dissects it, can provide success or failure for your application. Check out our channel for other videos on how to run your regulated business. Also, be sure to check out our ebooks in our store, where a range of books and manuals can help your firm survive in the FCA world. See the details below in the description. The importance of financial forecasting for FCA authorization. Applicants are required to submit a financial forecast covering 3 financial years. The forecast will need to be comprehensive, demonstrating that the firm has appropriate and proportionate systems, resources, and procedures in place. This is not just a box-ticking exercise but a pivotal element that can influence your application's success. The regulator's appointed case officer will review the financial forecast as part of the assessment of the application for authorization and will seek to ensure that the forecast, and its assumptions, are consistent with the other descriptions provided in the application, e.g. staffing levels, outsourcing arrangements, service developments, etc. Consistency between your written content and the numbers is vital. Components of a strong financial forecast. Your financial forecast should include a profit and loss statement, balance sheet, and cash flow statement. It's crucial that accompanying narratives and assumptions are clearly distinct from the projections, ideally on a separate tab or page. Consistency between your written content and the numbers is vital for approval. The financial forecast will need to be prepared at a reasonable level of detail, and presented as a profit and loss statement, balance sheet and cash flow, with accompanying descriptions of the assumptions upon which the forecasts have been made. Any narrative needed to be clear and distinct from the projections, i.e., a separate tab or page. A summary of the financial forecast should be included in the RBP, and the forecast model also included as a supporting document in the application submission. The 2 pillars of financial forecast review. The FCA's primary concerns when reviewing your financial forecast are twofold. First, whether the business meets its capital requirements. Second, if the firm will have sufficient cash to remain a going concern, an accounting term that essentially questions your ability to meet liabilities as they come due. Before moving to the next segment, if you find this content helpful, please hit the like, click the subscribe button and ring our bell to stay updated. Stress testing and duration of the financial forecast. In addition to your main forecast, stress-tested financial forecasts must also be included. This task usually falls on your accountant or finance officer, who will follow specific protocols. The financial forecast needs to cover 3 financial years from the expected date of authorization. Determining the appropriate financial years to include can be nuanced, especially considering the regulator's assessment might take around 6 months. Seek specialist help. While you can draft a financial forecast in-house, it's often beneficial to consult with specialists who can help ensure that your forecast aligns with regulatory expectations. Many consultancy firms can provide this as a comprehensive service. Conclusion. Submitting a robust financial forecast is an integral part of the FCA authorization process. It requires thoughtful planning, consistency, and stress testing to demonstrate your firm's capability to operate soundly. Always remember, your financial forecast isn't just a requirement, it's a representation of your business acumen. Want more information on regulatory issues? Please hit the like, click the subscribe button and ring our bell to stay updated. That wraps up today's topic. Questions or thoughts? Feel free to comment below. Until next time, keep mastering the intricacies of financial regulation. Call us on UK 0800 689 0190 or international +4420 7097 1434 or email info@complianceconsultant.org. Disclaimer: this video is for informational purposes only and does not constitute legal advice. Always consult professionals for your specific needs.